Everybody, welcome back to the channel. Today we're going to take a quick look at Brookfield Infrastructure versus Brookfield Renewable quarterly highlights. Both companies have been absolutely hammered this year, and I happen to own both of them. I think they're great companies. As I've watched the share price go down and down and down this year, honestly, I wasn't too stressed out about it because I knew there wasn't a sound reasoning for it. And when these earnings came out, I was right because they're both pretty good. One is better than the other. The better of the two is Brookfield Infrastructure. On the screen here, I have Q3 highlights for Brookfield Infrastructure. As you can see, they've highlighted that FFO increased 7% per unit. Now it did, but I will say that their capital recycling kind of skewed the numbers to the downside. So all sectors of their company went up and up and up except for one, and that was their midstream. Okay, so they did some capital recycling there, so they took an asset offline for a bit, which brought the numbers down 5% for that segment. So it took the total FFO down a little bit. It should have been around 13%, but you have to be fair. Year over year, it is only 7, but next quarter, I expect that to be righted, and we should see FFO increasing again with the money that they take, their proceeds from the capital recycling. Anyone who owns this company knows that they target between a 60 and 70% payout ratio for the Brookfield Infrastructure, and as you can see here, they are showing us that they are paying 67%, which is on the higher end, especially because in the new year, Q1 is usually when they increase our dividends for the shareholders. So hopefully they can get that payout ratio down and then give us an increase. I'm expecting something in the 6% range. They tend to increase it slightly every year, and last year was just about 6%. So I'm expecting slightly more than that, but we'll see. It's not a guarantee. They don't have to raise more each and every year, but like I said, if they can recycle the capital from the midstream, put it into something else, I think the payout ratio will come down, and we should be in line for a similar dividend raise as the prior year. Just on the screen here, Brookfield includes a nice little chart. As you can see, the FFO and AFFO as well as distributions go up year over year, and the payout ratios usually stay in a similar line here like they want, in between 60 and 70%. There's been a couple dips, 19 and 20 got higher, but still, I mean, even a 78% payout ratio it's fine. It's fine for a utility company. Take a look at other utility companies. Tell me what their payout ratio is. Usually they're over 100. Okay, so this is really good. Nothing to worry about. Everything is in line. The company is doing everything that it said it would. The only thing that is a negative, I should say, is that I happen to have purchased the company at a much higher price per share, but it's been a great opportunity for you guys out there. I hope you took advantage of this company. I really think it's quite a good one. So on the screen here, I have BEPC, the renewable company now, and as you can see, there's a familiar 7% of FFO per unit increase. So both stocks had the exact same amount of FFO increase, 7%, which is pretty good. All right, so it's nothing to write home about, but for a high interest environment, it is good. And the reason why both of these companies were able to have this type of increase is because a lot of their contracts have inflation escalators, and they do have a lot of fixed debt. It's not 100% fixed debt, but most of it is. So if you add those two things up, you can see why we have pretty decent results in this high interest rate environment where everyone is freaking out and selling utility companies. And yet again, BEPC also increases their dividend come first quarter of the new year. So we got to look forward to that in 2024. As you can see here, their CAGR is 6%, which is a little bit less. The actual CAGR from the beginning of inception for BIPC is around 8%. So this one's a little bit lower. It's a little bit, I wouldn't say worse of a business, but infrastructure business is better than the renewable business, but in the long term, renewable has a longer runway, in my opinion. So they're both good for different reasons. That's why I hold both of them. They're both great dividend growth companies. I think you guys should take a look at these ones if you don't own them already. They're interesting if nothing else. So thanks for watching, guys, and I'm looking forward to increases with those dividends in the new year. Take care.